Welcome, everybody, to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders. Blane Markham, great to see you, my man. How you doing?
Doing great, doing great. Thanks for having me in, John. Really appreciate you having me here on this Monday morning, and excited to be here. I have a couple things, need to be shared, and hopefully folks will enjoy seeing this at home.
Yeah, crazy stuff, man. I woke up this morning and been watching the news over the weekend, and I'm thinking, oh, all this conflict over in the Middle East is gonna just crush things, And here we got this weird Wall Street that I don't know that I understand. I mean, it kind of like just didn't even flinch at that stuff. And the kind of what I'm reading from the headlines and the buzz is that everybody's got this confidence it's going to be contained and relatively minimal. I think that's a little optimistic, but I'm humble. The market knows more than me, that's for sure. They got way more data points to make these decisions, to take actions than I'll ever have in my entire lifetime. So we'll see how it plays out. But yeah, it definitely. We were talking over the last couple of weeks about how there is this kind of range that we're locked in, a little bit of a slowly we were creeping up, but we were waiting for that event that would change it. And I just can't help but wonder if this isn't it. I don't know what your thoughts are on that.
Yeah, well, exactly. Well, just to touch on what you were kind of opened with is that, obviously, yeah, once markets closed last Thursday, things were looking pretty great. And then we started seeing the news headlines breaking out of the Middle East and, rockets firing, and everybody's like, oh man, this, for a lot of reasons, of course, like this is not, not ideal. And, you kind of saw some of that reaction on Friday in the markets, pretty steep reversal late week during Friday's trading there. But yeah, as you mentioned, it's not that there was not any development over the weekend, but wasn't a significant ramp up. And, because of that, it seems like the markets are kind of pretty much looking through it. I mean, I'll hop into this in a second, but if you look at where the index levels trading today, it's almost right back exactly to the penny where things closed on Thursday. So it's completely reversed that move. And it could be complacency or could just people just being very optimistic and confident that things are not going to materially deteriorate any further. So
Yeah, I saw this. I remember back in COVID, there were headlines coming out. I mean, the big COVID crash, I think, was the end of February, beginning of March, somewhere in that time.
mhm.
Maybe even a week or two later than that. And I remember weeks leading up to it, talking about the pandemic. Forget about what caused it or anything. That can be debated until the end of time. But looking at the sequence of events and the impact on the market, it's like that was bubbling around for a while. And so that's the last time I remember the market kind of, and I remember being shocked then that the market was a little, blasé about the news. I look at this and I think we really become desensitized. At least Wall Street has, because like how many times can you like react emotionally and as significantly as we have over the last month or so and not get desensitized? So
Yeah.
I wonder if that's they're waiting to say, on the surface this looks like this, but we've seen so many things change from what they appeared in the beginning. Let's be cautious. Let's hold on. So, I am taking a position of caution. That is a pretty big variable to be thrown into the pot and stirred into this recipe.
Yeah, yeah, no, I totally agree with you. Yeah, I think it's best when talking about a market approach. If you think about it, use a metaphor of a traffic light, whether you have a red light, a yellow light, or a green light. I definitely fall in the camp of a bit of a yellow light right now. Just because until it's resolved or things really cool down, of course it's going to be an overhang on the market for a number of reasons. But with that today, I'm going to go ahead and start sharing my screen here, John, and just start pointing out a few of the things I wanted to share here. If you could go ahead, looks like I get some sharing
Yeah, just
capabilities
got
here.
that turned on.
There
Yeah.
we go.
And by the way, too, folks, if you're in the room and you got a question, shoot it in the chat box. We want to hear from you. Blaine and I will talk amongst ourselves all day long, but we want to make sure we're answering the questions that you have. So, chime in, shoot us a message, and let us know, and we will do our absolute best to cover all of them that come in.
Absolutely. I would love to hear some feedback from the audience. But As we were just talking about, as I mentioned, John, you can see right here, this is a past year's chart of the S&P 500 index, and you can see this open hollow close bar right here. We're trading literally exactly almost to the penny where the index closed at on Thursday before all these news headlines started breaking. So, you can see we've had a pretty sharp reversal from, where things closed at on Friday. So for now, it looks like the market is assuming the best and trading off of that. And we can see that, corroborated here in a chart of the VIX as well. So this is looking at the volatility index, of course. And you see we had, a pretty decent little spike. It wasn't a concerning spike on the VIX by any means, but, we popped a little bit above 20 on, Friday of last week. So, a little bit of elevated volatility, people trying to kind of sort out, all right, what does this mean? But you can see today we've fallen, we opened right about 20 on the VIX, and now we've fallen back down, and we're actually below 19 now. So, really not elevated on, the terms speaking of the VIX as of now either. So, I mean, you can see, Wall Street, as we said, is really just kind of looking past this conflict for now, unless there's any significant developments to come. It seems, largely contained and likely not going to affect the markets as of now. At least that's Wall Street's opinion. But, with that, I think it's, a good point to mention this, in last week, I kind of touched this on the Periscope, John, is that, we had kind of gotten into a phase where, we had almost 2 weeks straight where the market was really just going up day after day, with really no end in sight. I mean, it was just kind of just trading up, it had gotten into a sort of a melt up mode. And part of that was a function is, we got through earnings season. It was much better than people had feared or expected. We had gotten a significant number of macroeconomic reports that started showing better than feared data as well. These, inflation, jobs reports, things like that. So, we got past a lot of these hurdles and there wasn't that much in front of it. So, through this period right here, the market was just kind of melting up. We kind of started to break out of that upper end of that trading range that we had identified a couple of weeks ago. And it was just kind of hovering there. And it was really just an air pocket on the charts, is what I'm speaking of. It's kind of an air pocket between where the S&P was trading and the all-time high that was set back in mid-February, a little bit above 6,100. And on Thursday at the closing price, we actually got within, I think, less than a 1.5% away from meeting, trading all the way up to that all-time high. So, when that happens, of course, coming off of what we had just experienced a couple months prior, really truly trading straight up for a couple months on end, again, stocks were in that kind of melt up mode. But with that, with that in mind, there's also going to be investors out there that are just waiting for a reason to sell stocks and take some risk off and de-risk. And, that's exactly what the weekend, the events of late last week served as, really, in my opinion. We got right here, closed just about 60-50 on Thursday. Then we got all the headlines coming out of the Middle East, and that was the excuse that investors were looking for to start taking some profits, taking some risk off the table, slow down that just rip roaring rally higher, and just let things cool off before seeing some new buyers come back in the market and push things higher, which is what I think you're seeing today. There was tons of people out there that was still very skeptical even until this day of this rally off of the bottom. And so that, it's been well documented. There's a lot of institutions, a lot of big time traders that are, behind their, yearly benchmarks and need to catch up. And it's, the year's getting short here. So being about halfway through the year, I think you're likely to see a lot of, opportunity or opportunistic buying when you get these dips, because, there's people that, are needing to get back in because they're trailing. So I think that's what you're seeing largely today, combined with, just people kind of looking through, the risk that we saw last week, and, assuming, as we said, John, it's not going to, boil over and become a wider conflict. But with all that said, the technicals are still very strong in the market, but still taking kind of, as I mentioned, kind of a yellow light approach moving forward. So with that, the next thing I want to touch on here, John, this is actually a chart of GDX. I'm sure you're probably familiar with this ETF right here. But given that we're, kind of talking about, at least for my personal perspective, given the kind of uncertainties that are still out there overhanging the market, looking for a way to proceed with, bullish, outlook on the market, and find some bullish opportunities. But this one actually benefits. This trade actually kind of thrives on some of this uncertainty. So this is the Vanek Vectors Gold Miners ETF. So this is an ETF that actually owns, all of the major publicly traded gold mining companies, the gold streamers, things like that. So they are owning a lot of these precious metals companies that they're out there pulling the metal out of the ground, they're selling it, they're merchants of it, and they of course benefit greatly when the price of that underlying commodity rallies significantly higher. Now, of course, as we know, in times of heightened uncertainty, a lot of investors tend to flock to what they view as safe haven assets. And of course, gold falls into that umbrella. So, when you see things like that bubble up, whether it's geopolitical or, gold's been, in a very strong bull market for really over a year now. And a lot of that has been, again, still somewhat geopolitical, but also, fueled by concerns about rising U.S. debt and deficit levels. So there's several different tailwinds behind the price of gold. So not only just one thing has to work out for the trade idea to actually work out and pan out, but that's why I really like this setup right now, is that it's still, you're looking at things through a bullish lens, you're finding bullish opportunities, but it actually can benefit, whether the stock market continues to rally higher, and kind of look through what's going on, around the world. But it's got those multiple tailwinds that can continue to push gold higher. So, these gold miners are going to benefit from that, increasing. It's currently, near all-time highs, but it's also increasing the price of gold. So the way I'd look to go ahead and trade that would be using some options, and particularly our call option spread strategy. And so I found this one ahead of time right here. This is looking at GDX right here. And so this is the August 15th, and I pulled up the 45 and 50 strike calls right here. Excuse me. And I've gone ahead and plugged that into our call option spread calculator tool right here. And so you can see here's our ETF symbol, the current price it was trading at. Here's our 45 strike call that we look to buy to open, of course, and there's its premium. And there's our 50 strike call that we would sell to open and its premium, and just hit our calculate button there to pull up the analysis below. You can see, looking at that, you can see that this at current prices, at least when I looked at this right before I hopped on, this call option spread was trading at 4 points for the spread. So, it's a 5-point spread. If you were to get in at 4 points, you would have a 25% profit potential for this trade, which you can see reflected down here in the bottom of the calculator. Here is the profit potential in dollar terms and also percentage terms. But you also have a nice downside protection built into this trade as well. Should the price of gold stumble for whatever reason, some of these gold miner shares pull back. You can see right here, even if GDX shares were to decrease by 7.5% at option expiration, this trade would still be set up to produce a near 20% return, as indicated right there. So, if this setup, again, you could see GDX continue to rally, the spread would be set up to produce a 25% return. You see GDX remain flat and still be set up to produce, again, that full profit potential of 25%, because this is an in-the-money call option debit spread. It does not require the underlying ETF in this case it doesn't have to rally or increase in order for the spread trade to profit. So if it does increase, it's going to realize its full profit potential at option expiration, as indicated here. Again, if it remains flat, again, that 25% profit potential. And then again, you can see the nice downside protection built in as well. So, that's just kind of where I'm thinking right now. Again, John, using that kind of yellow light approach to the market, still looking for opportunities, but just, being cognizant of some of the risks that are out there right now.
Yeah, and this strategy is great because we are in just a wild market climate. There's a lot going on that is, I mean, I'm just going to use the word irrational. It's just kind of hard to follow the logic behind it and how it's working. When you get to something like this strategy, you don't need to worry about whether the market is logical or not. You can set it up, you can see the whatever direction the underlying goes, you're still safe. You're going to make a little bit of income here. And that's what we're trying to do as traders. I mean, if you're a new trader just getting in, trying to find ways that you can consistently make income is going to make trading more plausible for you, more accessible. It's going to keep you engaged in it. If you're, an experienced trader, you're probably a little bit more dependent on your trading. You probably, have been in it long enough to know that this is something that can supplement or create income very nicely. And you need to have these strategies that perform in whatever climate. We've been through a lot of climates recently, and it's great to have you walk through these kind of tools that really show how people can get the benefit that they need out of the markets.
Yep, absolutely. And I'm so excited to be here to do it. And that's why we do it. We like to be able to help people and show people these different strategies that we like to deploy, we like to use. We found some great success personally using. Exactly as you laid out, these strategies, they're designed to work in a variety of different scenarios, whether talking about broader index scenarios or just specifically talking about this ETF in this case. This trade has the ability to profit in several different scenarios, whether the ETF rises, whether it remains flat, or even if it sells off by a certain amount. So, just using these strategies, being wise in how you deploy them, and helping use them appropriately, so they help to improve your probability that trade you're looking to put on has a heightened chance of ending up profitable. So that's what we're all about here with our trading strategies.
Yeah, well, this is great stuff, Blaine. Thanks so much for taking the time to show it to us. We're definitely going to be tracking this and seeing how it does. Of course, very interested in what's going on in the market and in the world. We get isolated into the markets in these discussions, but it's just some crazy stuff going on, and we're going to hope it is contained. We'll hope it gets resolved soon, and it's something that we can get back to just regular life.
Yep, for sure. And just always like to maintain perspective through like things like this too. Just to throw this out there, of course, this is not the only geopolitical thing going on right now. And it's not to minimize that at all. It's awful. Hate to see any of this stuff. But remember, we have another war going on that's been going on for I think nearly 4 years now, which is hard to believe between Russia and Ukraine. It's a war in Europe. But if you look back, if you just kind of zoom back out to the start date of that, of course, there was a lot of volatility right near the start. But if you look where the S&P was trading then and where it's trading now, obviously, investors have been able to find some nice success between then and now. And it's not that, stocks look past that per se, but maybe things didn't get quite as bad as people had, outlined at the beginning and kind of, the worst case scenario type stuff. So, a lot of times, these geopolitical flare ups happen historically. A lot of times they have proven to be very good entry opportunities in the long run. So I always like to keep perspective on that as well. I'm not saying that's going to happen every time, of course, but just historically speaking, always nice to keep that perspective.
Yeah, no, definitely. That's a key thing to keep in mind. So great to add that in there and keep everybody kind of level-headed and objective in all this stuff. So awesome stuff. Well, I apologize for the background noise there. My studio is in my shop and my air compressor just miraculously kicked on. So yeah,
That might be the sign, John. I think you might have to go take care of some tasks or something. Somebody might be sending you a message.
yeah, somebody's giving me the hook, that's for sure. But this is good stuff to take away and work with here. So Blaine, thank you so much for jumping on with us again. And folks, I'm going to put a link in the email we've talked about in the last couple, and I've seen a lot of activity, people picking up on this. Wayne, we've got the weekly profit opportunities newsletter that Blaine does every Sunday. He throws out a really great trade for folks, and it's $1 right now. Get in it for $1. Take a look at those trades. We've mentioned it a couple times. I see people jumping on it, and I have not seen people looking back. It seems like they're really liking it, Blaine. So we'll put a link to that in there. And it's trades like this that you're going to get in that newsletter. You're going to get that perspective. And Blaine's doing the heavy lifting and doing the hard work for you. So we'll put that in there. And Blaine, we will be talking to you on Wednesday, my man. And we got a big announcement on Wednesday, so make sure you tune in. We got a whole new program that we're going to throw out there that is going to be wonderful for all you traders. So definitely catch up with us on Wednesday. Blaine, you take care, man.
Yep, absolutely. Well, thanks so much for having me, John, and same to you. I'm looking forward to being back here Wednesday.
All right.
All right, take care, everybody. Have a great week.